Everyone's Rob Roy of Elliott Wave Options, and welcome to this week's U.S. market update. As you can see from the background, still in the cabin, up in the mountains, avoiding that hurricane that went through Florida. Wasn't the primary reason I came up here, but hey, things work out for a reason at times. As you see on your screen now, those are the stocks of interest we'll be covering in this update. As a reminder, if there's a particular stock you're interested in, go right to it with the chapters feature in the video, so you don't have to wait through all the rest of the symbols before you get to the one that you're most interested in. So taking a look at today's market, you can see that we gave a tiny bit back today, but not that much. When you take a look at this move to the upside here, that big move occurred on Tuesday. And during Tuesday night's TradeFinder, we talked about the JOLTS report. And that's the job openings and labor transfer report. And basically what that is not just openings, but people that are moving to other jobs. And oftentimes when you leave a job, you're moving to another job because you're getting more money, or people come and recruit you to a new company to pay you more. And that's wage inflation. And that's one of the Fed's concerns. That's one of the things they want to get rid of. So the JOLTS report came out on Tuesday and said, hey, it's a little bit weaker. And the market moved to the upside on Tuesday. And we talked about that in depth during Tuesday night's TradeFinder. And by the way, while I'm talking about TradeFinder, we do that every Tuesday night at 9 p.m. Eastern Time. And if you'd like to join us, you can do it for free. Go to our website, ewotrader.com, and sign up there. 9 p.m. Eastern Time every Tuesday night. We look at the markets, we look for trade ideas, and we have a live Q&A, and we have a great community there. I think you'd fit right in. So I'd love to have you join us during next week's TradeFinder. So we did talk about how that was driving the market to the upside. However, I also talked about during TradeFinder, when we look at the TNX, we had this movement down in interest rates. So was it really the jobs report, or was it more interest rates moving to the downside that created that rally that occurred on Tuesday? Note that they did jump back to the upside today. Well, let's go back to the SPY chart and talk about what happened today. And we had another report on employment, the payrolls report that came out today. And it basically showed more jobs added than expected. And then they come in with the revisions to the downside for June and July. And I kind of joke about this all the time from a conspiracy theory thing, but you get the number that comes out, and then there's like 18 revisions that come out after that. So, the jobs report looked kind of negative at first, like all of a sudden, we're adding a whole lot more jobs. That could add to job inflation. But let's reduce June and July. So who knows what really came out of all that. But that was the news of the day. The market ended up finishing to the downside. And if we take a look at the 10-day moving average, you can see we are still a tiny bit overbought from the 10-day moving average. A quick reminder, the market is closed Monday for Labor Day, so we're going into a holiday weekend. Hope everybody enjoys their holiday weekend. Honestly, I thought we might see a little more pullback, especially on that jobs report, although it was offsetted by the June and July revisions, perhaps back down towards the 10-day moving average a little bit, but it didn't happen. So far, what's happened since Tuesday is nothing. We've consolidated that big move to the upside, and the thought process being that since the Fed is so concerned about wage inflation, that if we're showing that maybe the job market is easing a bit, the Fed may not do that November rate hike. Remember, the market always looks 6 to 9 months ahead. The market will start to move up before things feel better to us economically and in the in our pocketbooks with what's going on with inflation. So market looks ahead, a little bit of a move that maybe we get a little more move back at the beginning of the week. As I said, I was surprised that we didn't get maybe a bit more movement to the downside. Now, what that tells me is that the people that are long weren't that concerned. going into a holiday weekend. Oftentimes when you have 3 days in a row with no market activity, traders will square off positions because they don't know what kind of news may come out over the weekend. So nobody's too concerned right now about anything significantly negative coming out. So a little bit overbought as we head into the holiday weekend. You can see we're sitting right here at the 450 level. I wouldn't have been surprised. I still wouldn't be surprised if at some point we come down and test 420. That's seeming less likely now, because now you can note that 420 is kind of a ways away. It is a very strong level of support. It was a strong level of resistance, but note where we are now. Maybe that's it. Maybe that's all the correction we get is just a quick back test to 450, and then we move to the upside from here. Kind of interesting to see how that plays out. So back to the bond market with the TNX. Big spike to the upside today. Rates jumped back big. Market didn't sell off. That's surprising to me as well. Normally when you have these kind of dichotomies, and especially when you're dealing with the bond market versus the equities market, I'm always talking about how it's important to have at least a working knowledge of the bond market if you want to be an equities trader or a derivatives trader, all options, etc., because the two go hand in hand, usually in inverse proportions. And there's noted normally that there's a lot of smart people in the bond market. The bond market is larger than the equities market. So when you have a big move back to the upside like that, and you don't really see much of an effect on the equities market, pretty surprising to me. Taking a look at the dollar bounced back. And in fact, this is not the closing high. Dollar trades, 24.5. Just kind of like we talk about Bitcoin, etc. You get end of day prints. So the end of day print, when we see it on the dollar, is going to be back above 104. So we're going to be back up here when you see that closing print. So we had interest rates go up. We had the dollar go up. The things that it felt like were driving the market to the upside because they had gone down earlier in the week, went back to the upside today, but we didn't really sell off today. So I just think this is going to make the beginning of next week very, very interesting. Could it be, Chairman Powell had made a comment at the Jackson Hole meeting that something that they're saying, getting inflation down is not nearly as bad as what could be coming in the economy. And nobody knew. It was a very cryptic message as far as what in the world is he talking about? What is he seeing? Is it something in the banking sector that we're going to see? Who knows? But the market hasn't really been concerned about it. So when you take a look at that, so far, so good. You get interest rates jumping up, the dollar moving up significantly, and yet the market holds court. You would have to view that as a potential bullish sign for the market to perhaps move back to the upside. So look at a couple other markets here, the DIA real quickly. And we look at the DIA, and we're right here at 350. And that's the level we need to get back above. So we had broken below that, and we're just kind of trading. We're just trading right at that 350 level. But for a bullish standpoint, we got to get back above that level. And all we've done is test it. Note these bars, as you can see illustrated there. We traded up, and then we came back down. And then today, once again, tapped that 350 level on the high, but closed below it. We got to get back above 350 on the DIA. And without that happening, it makes you wonder, how bullish can you be moving forward? And then the Qs, everybody wants to look at the Qs. And so we would want to see, what did they do today with interest rates jumping back up significantly? A little bit of a downside, but not that significant. A little bit of a surprise to me that we didn't at least come back to the 10-day moving average. So today didn't make a lot of sense to me. And when you look at these correlations that exist in the market, sometimes they get out of whack, discombobulated, as I like to say, but normally that doesn't last very long. and things come back into line, especially when you're talking about the bond market versus the equities market. So I think early next week, we're going to see these come back in line. Now, whether or not that's interest rates coming back down while the dollar move or the market moves higher, or is the market going to reverse and start to head back down versus the interest rates and the Qs, et cetera. That'll be interesting to see. Before we move into stocks of interest, and there's several of them that we've been talking about, I got to tell you another quick story. We talked about this last week, and boy, the comments that you made, the Chuck Norris comments were great. And, that was coming from a comment that was made as I was driving up here in the middle of the night last week. I was actually in Lowe's today at lunchtime, and a gentleman grabbed me by the arm and says, "Hey, do you know who your twin brother is?" And I was like, "No, who?" And he goes, "Chuck Norris." And of course, I had to get a chuckle out of that. And he's like, "I had to do a double take to see if Chuck Norris is here in the mountains of North Carolina." And so last week we talked about the Chuck Norris thing, and you posted some great one-liners there, some I hadn't seen before. We're going to continue that based on the fact that now, twice within a week here in the mountains, somebody has referenced my somehow resemblance of Chuck Norris. So let's do it again this week. Post your favorite Chuck Norris one-liner, and that gets you a double entry into our contest. We're going to give away 4 of our level 3 subscriptions to ewotrader.com. Now, these are worth thousands of dollars, but don't forget, we got to get to 40,000 first. So post your favorite Chuck Norris one-liner, but get your friends to do it too, and get them to subscribe so we can get to that 40,000 level and give these subscriptions away. So let's look at stocks of interest. We take a look at Tesla, and on our live show back over on the Hub Financial channel that we did earlier today. And if you're not familiar with that, go over to the Hub Financial channel here on YouTube and subscribe there. And then you can be notified. We do that every Friday afternoon at 2 p.m. Eastern time. It's a live Q&A. So if you have some questions, particular stocks you'd like to look at, we can do that. And Tesla was brought up. It was also a stock of interest today. We moved up, and the move from the lows, I kind of felt like on this move lower, I had been a beacon of warning, and that was just because of what Elon Musk had said. He's like telling you, we're closing factories, we're retooling, we're upgrading software, etc. We are not going to produce as many cars in the next quarter, so the numbers aren't going to look good. And it seemed to take a while, and then finally we broke to the downside, and we were right down to that 61.8% fib level, and we moved back up, but we ran up into that 260 level, which was support, is now resistance, and we backed off today. I don't know what the catalyst could be to push us back higher, but that 260 level is what you want to watch if you're trading Tesla. If you're long Tesla or want to be long Tesla, let it get above 260. If you can get above it with follow through, you could be off to the races with that wave 5 target all the way up near 340. But it's got to break above 260 first with follow through. Right now, all we did was we broke support, we've tested it, and we could move lower from here. So please be careful on the whole Tesla thing right now. They'll get all ramped up and things will be better in the future. But I'm just talking about right now, we need to pay attention to what Elon is telling us. Bitcoin, my goodness, just when we thought things were getting ready to take off to the upside, right back down. How many times have you heard me talk about I don't like vertical moves? So we had a vertical move to the downside, vertical move back up, and then vertical move back down. And that's what happens. And that's why I hate these vertical moves, because what goes vertically up or down often gets retraced. And that's where we are. And lo and behold, we're all the way right back down here to the 26. Right at the time of this recording, we're more in the 25,000 range. So we'd have to drop that down a little bit. And we need to hold here, desperately need to hold here in Bitcoin, because if we break below this level, it's all that favorite expression that I like to use, and people always question, that's Katie bar the door. And if you wonder what that means, that means all what's about to break loose. And it's an old Western thing that Katie barred the door so the horses don't run out. That's where it came from. But now it's evolved into all hell's about to break loose. And that's what happens to the downside. And that could occur if we cannot hold where we are right here. I mean, we could be looking for a whole significant low in Bitcoin. We're not there yet. We could hold here. We did before. But with that bounce, we thought maybe we were off to the races to do something, and it didn't happen. And we looked at Coinbase in the live show. So if you're interested in Coinbase, go over and look at the live show that's posted on the Hub Financial channel. But getting through the rest of these stocks of interest today, and these are the ones most talked about on Twitter, if you wonder where we get them from. Nvidia. And my goodness, what could have been more talked about this week than the deal with Nvidia and Google? So you got the two biggest AI players getting together. And so that gave Nvidia another big boost to the upside, new closing highs. We did close off those highs at the low, but still, notice where we are, right at that previous wave 3 high. And it does seem like Nvidia wants to go hit that wave 5 target there around 580. Don't know exactly when that's going to happen, but just when you thought what other good news could come out of a stock, they come up with that sort of a deal. So Nvidia, I don't know, that's just a juggernaut. I kind of feel like Nvidia and Apple are stocks that you just simply don't want to short. So we'll see if we can hold this 480 level and bounce back to the upside. And speaking of Apple, it was talked about a lot today because look at that. And that's exactly what I'm talking about, why you don't short Apple. It's moving to the downside. We had a big move lower there. We kind of held ourselves in no man's land. Little bit of support right there at 175. I would have thought we would have gone to at least 170 here, but we didn't get down there. And the reason I say Apple's so difficult to short is they have so much money, they can come in and up their stock buyback program at any time, and you can get whipsawed if you try to short it. It's more of a stock of let's let it have a correction and look for an entry to go long rather than trying to pick a spot to short it. It's really just to short Apple. And there we go, right back to the upside. So I kind of have Nvidia and Apple on my no-go list from the short standpoint. So perhaps Apple's just going up to fill this gap, going back to the 3rd of August. And once it fills it, we'll see what happens. I will admit that this move to the upside here is pretty vertical. We have some separation with the 10-day moving average. You know, the Robisms. We don't like vertical moves. Gaps get filled. We have the AI data to prove it. And then we also say no security name time frame goes too far away from the 10-day moving average. So we are a little bit overbought on Apple right now, but look at that move back to the upside just when it looked like Apple was trying to fall apart. So we're right there. Maybe we get a slight tick higher and fully close that gap. But with the fact that we're overbought, I wouldn't jump into Apple so much at the beginning of next week. Let's see how it plays out. Maybe we get some sideways consolidation, backing and filling, if you will. Amazon, we hadn't talked about that one in a couple of weeks. So we had a big jump up on earnings, and then we came back down, filled the gap. As we just talked about, we have the AI data that says 94% of gaps get filled. It's not 100%, but a lot of them do. We don't know exactly when. Sometimes it takes a while. Sometimes it occurs immediately. So we get this gap filled, and Amazon turns around and heads back to the upside. Now, with this wave 5, we kind of hit the bottom part of this tap box, time and price projection, but oftentimes we go to the midpoint, and we're not there yet. Perhaps that's where we're going on Amazon. We got an awfully low VIX, so the volatility is low. And if it breaks that 13 level on the way down on the VIX, then maybe we are really off to run on the next move higher. I'm not a huge person on seasonality, but statistics do show that September and May are the two worst performing months of the year. So to see the market continue to rally in September would be unusual, but not unheard of. As I said, it's not a 100% thing. It's just on average. May and September are difficult months for the market. If we're looking forward to a rate cut sometime down the road, and Chairman Powell knows something that we don't based on his comments, perhaps the Fed is looking. I think the market kind of took some interest out of that. Like, oh man, things may be starting to look pretty gloomy, and they may have to look towards cutting rates, and the market will be in front of that. We will rally before you start to see those rate cuts come in. So Amazon bouncing back to the upside. I think this one's in no man's land. I really feel like we need to break above that 142 level before you start to look going long Amazon. But after closing the gap and bouncing off the 50-day moving average, certainly worth keeping an eye on. PayPal, awful lot of interest in PayPal recently. I'm not 100% sure why. There just has been, perhaps because we came down to these lows here and tested the lows around 60. People are looking for places to go with less risk. And if that's what you're looking for, I would say if you have some speculative money, and that's what it would be because you're still below the 50-day moving average, we're above the 10-day moving average, you could get a bit of a continued bounce out of PayPal. Came down and hit support at 60. We're moving back to the upside. If you're a bit more conservative, again, the aggressive versus conservative comparisons that I like to give each and every week, the more conservative was let it get above the 50-day moving average. So let it get above 65, and then you can start looking long PayPal for even a potential move back up to fill this gap. It looks like at this point it's the wave 4 correction, but that's an upward correction because it's a downward move. So some more movement to the upside is possible here at a PayPal. If you're really aggressive, go now. If you're more conservative, let it get above the 50-day moving average first. Alibaba, and the China stocks are in the news. It seems like every day now. And, this is where you have to put faith, because every time we've gotten comfortable with the China stocks that the Chinese government is going to leave these big companies alone, then they come back out with more rhetoric, and it seems to turn and move things back to the upside. So far, we've had some moves higher in some of the China stocks, PDD, et cetera. And so here's Alibaba that was talked about a lot on X. It used to be Twitter today. And so here we are at 95. And taking a look at that, we are not in a 5-wave pattern. So we're looking for a new impulse pattern. You could take a look at this and say, wow, is that some sort of a big zigzag pattern? And you could look here for a complex one, or look at the big one right at the 61.8% level, which looks like, there may be more upside to go on Alibaba. Even if the U.S. market gets a bit weak, perhaps you start looking at some things internationally. And for all the people that have been chattering about Alibaba today, because it has had a nice run off of that low going back to August 18th, perhaps that's a place that you want to go for your long money while the U.S. figures out what in the world's going on. And what the heck was Chairman Powell talking about when he came out with the fact that he's seeing some things that inflation might be the least of the worries. The only thing I can think of is something in the banking sector. Now, he's come out and said, with all the regulations that they've put on regional banks, that they're as tight as the big banks. They made them raise more debt. That was a big news item last week. And the idea for that is and why would you say this if you didn't know something? But if the regulators needed to come in and take the banks, having the increased debt means that there's less exposure for shareholders. So I don't know. It was a pretty, even for the Fed and even for Powell, a cryptic message. So those are the things we'll be looking at and talking about next week. But that covers everything for this week. Again, if you liked the video, please hit that like button, hit subscribe. Let's get to those 40,000 subscribers. We would love to give those 4 subscriptions away. So once again, your favorite Chuck Norris one-liner gets you a double entry. And I hope everybody enjoys their extended holiday weekend. And we will be back to talk to you again next week. Take care, everybody. If you like these recordings, I'd like to invite you to join our new TradeFinder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.